Hi, my name's Josh Mahony, Chief Market Analyst at Scope Markets. Let's look at the week ahead for the week starting Monday the 6th of May. This comes off the back of a week that, of course, has seen the Federal Reserve and at their latest monetary policy decision. And certainly that theme is going to continue as we move throughout this new week with the likes of the RBA and the Bank of England in particular, deciding what they want to do in terms of monetary policy. Here's an overview of some of the big ticket items for the week ahead. These times are UK or London times, so you can adjust accordingly. And the data is taken from Trading Economics, probably my favorite economic calendar. So make sure to use that as well. So in terms of the big ticket items, Tuesday, we've got the RBA interest rate decision, 435 expected to remain as is for the time being, but really it's about the outlook going forward in terms of monetary policy. Balance of trade, so trade data coming out of Germany before the European Open. We've got the IV PMI in Canada, which is a wide-ranging PMI survey. We've also got Chinese trade data coming out overnight, Wednesday into Thursday. We've got the Bank of England rate decision on Thursday. And then on Friday, a raft of UK data points centering around the GDP number. This comes in the wake of a downgrade from the OECD. We see unemployment rate, essentially the jobs report from Canada on Friday, and the University of Michigan Consumer Sentiment Survey alongside that. So the first topic of the week is the UK, with the Bank of England interest rate decision coming on Thursday. Markets expecting to see them keep rates steady, but really it's a question mark on when we're going to see interest rates being cut. It's a similar kind of question that we're asking of all the central banks around the Western world. And certainly for the UK, this is particularly pertinent. We've seen a rebound in terms of monthly inflation metrics, and that has pushed back expectations. We can see here in terms of the market expectations for this meeting, just a 7% chance markets are pricing for a rate cut this time around. And instead, people are looking towards August as that first rate cut. Previously, that was June that people were pricing it in for. So it has been pushed out, just as we've seen expectations for the Federal Reserve similarly pushed out. And this really does raise some question marks around the trajectory of inflation. Now, it's notable that if I just bring this monthly breakdown in terms of inflation metrics across a number of the major economies, you can see that the United Kingdom, which is in the orange section, we have seen two very solid readings over the past 2 months for February and March. And that really does set back the expectations of a significant slump this time around, or within the near term. Certainly notable that we also have a very strong reading that's yet to drop out for May. And you can see here that May figure is very significant in size. Now, what that means is that we do have the chance of a decent amount of disinflation to come over the near term. UK inflation is already elevated compared to some of its neighbors or some of the other major developed economies. But nonetheless, it does look like we will see some significant disinflation over the near term. But that's really being set back by the fact that we're seeing these very strong monthly readings. It is a theme that we have seen elsewhere, as you can see here. The Eurozone in particular, we've seen the April figure for the Eurozone. We haven't seen it for the rest of these countries, but certainly notable that we've seen 3 very strong figures in terms of the monthly readings for the Eurozone. So whilst we've seen that year-on-year figure continue to decline, it's notable that if you take the last 3 months and extrapolate it forward, well, things are not looking so hunky-dory when you look at the Eurozone. In terms of the UK, you can see that 3-month annualized figure is 241. So certainly there is an expectation that we are going to still move towards the downside. But I would say that by and large, recent gains in terms of inflation could set us back on that trajectory. And so there's a theme to be built around that, in terms of the idea that the Bank of England might have to hold off. That's why we've seen that repricing towards August away from June. But it's going to be, a key week also because of the fact that we have GDP data coming out. This comes off the back of an OECD report, which essentially saw them forecasting a 0.4% growth for 2024 as a whole. Now, this essentially sets it back as the worst performing country this year from the sort of developed world. And that was a downgrade from a number that wasn't great in the first place, which was 0.7% was their previous forecast for November. So How are things shaping up? Well, the forecast is that we're going to see the quarterly figure back into positive territory. That would be a plus. The year-on-year figure expected at 0.5%, and the month-on-month expected flat at 0%. But this comes alongside the likes of the trade balance, industrial production, manufacturing production. So Friday morning, also another day that should be key really for people trading the pound, as we see the Thursday rate decision and the Friday GDP and wider economic releases coming out. In terms of a market to trade, well, this is the euro against the pound. I think this is particularly interesting because we've seen it sort of seemingly bottoming out here. And so what we would need to see for this to really rebound is the possibility of the ECB holding off and the Bank of England essentially deciding that they want to cut interest rates over the near term, so weaker pound and a stronger euro. Well, arguably markets are thinking the opposite. Markets are pricing for the ECB to potentially cut rates in June and the Bank of England pushed back. I think, as we've seen with those last 3 monthly figures out of the Eurozone, there's an argument for that to not necessarily be the case. But Lagarde still seems relatively bullish for a near-term cut. And the year-on-year figure is still well ahead of where the UK is. But certainly the tone of this meeting and the outlook from the Bank of England will be absolutely key here, because if we do break the 852 level, then it looks like this recent sort of recovery phase could be over, and the sell-off that has been dominating over the past couple of weeks could continue apace. If we look at, say, the 4-hour chart, we can see that we're sort of regaining ground gradually. And so, there is a possibility that we've bottomed out here and that we're going to rebound once again. But certainly, what's it going to take for that to come into play? Like I said, a stronger euro, so the possibility of a more hawkish stance over in the Eurozone, and a weaker pound, so a possibility of a more dovish stance from the Bank of England. Will that come to fruition? Well, it remains to be seen, but certainly we have seen a bit of an uptick in terms of inflation of late, and I think that will likely play into sentiment at the Bank of England when they decide this coming week. Next area I wanted to talk about is the Australian region, where we see the RBA with their interest rate decision. That's on Tuesday. We've also got a number of other metrics. We've got a sort of private inflation gauge coming out on Monday. We've got retail sales coming out on Tuesday. We've got building permits on Thursday. But by and large, people just care about that rate decision. 4.35 expected to remain. But crucially, we have seen Australian inflation rear its head once again with a 1% quarterly figure coming out. And that quarterly figure, of course, it's not necessarily as frequent as you see elsewhere where we see monthly figures. That quarterly reading of 1% really sets back the idea that we're going to see an interest rate cut coming into play straight off the bat. You can see it here. The expectation here is that we're, not necessarily going to go and see that direct trajectory straight back down to target. And so this sort of choppy move because of that 1% quarterly figure from the RBA does really hinder the idea that we're going to see the RBA cut this time around or within this year at all. There's question marks about whether we might actually see them hike rates before they cut rates. So that provides the potential basis for us to be looking at this meeting and trying to gauge exactly how things lay up when it comes to the Reserve Bank of Australia. Now, in terms of the market that I wanted to show you in relation to this, it's the Aussie against the Kiwi, certainly notable because of this sort of consolidation pattern and the rally out through resistance, but ultimately taking us back up into this sort of top end lofty area here. Are we going to see the RBA portraying a very sort of hawkish stance and essentially saying that they're nowhere near cutting interest rates anytime soon and we might not necessarily have it this year? Or are we going to see the opposite? Will we see them allaying fears that we're going to have to wait until 2025 and instead have a nod to a potential rate cut this year around? Well, certainly if that was to happen, we could see this area as an area where it's relatively overvalued because of the sort of trajectory over the past year and a half. It has essentially been encapsulated within this sort of 106 up to a 0.08 kind of area. But really the key thing is, do we see that trend reversing over the near term? And I would say no. At the moment, the trend remains bullish. We're pulling back a little bit, and therefore you can see here this near-term swing low that's in question is the 1097 area, just above that level. There you go. So it's around 109.725. So until that level breaks, near-term downside is likely to be bought up if you're following this trend. And it would take a break back below that level and a relatively dovish stance and a shift in terms of expectations for the interest rate outlook from the RBA. That would certainly raise the question mark of whether the gains that we've been seeing of late are justified or not. So look out for that 109.725 level. If we break below that level, then it would point towards a wider pullback for this market. But ultimately, it has been a very strong performer of late. And therefore, I wouldn't necessarily be looking to predict a reversal until you see price action telling you that that could be what's happening. And we haven't broken out from that trend of higher highs and higher lows at the moment. So therefore, the weakness we're seeing at the moment could be temporary or fleeting in nature. And then finally, looking at the Eurozone with a particular focus on Germany. Germany, of course, has been almost the sort of problem child for the region after so many years of propping up the Eurozone. It's really been struggling. And in part, that comes down to the weakness in the manufacturing sector, in particular, over the course of the past couple of years. Where services sector has been relatively strong. Now, that comes back into the focus this week with the fact that on Wednesday, we've got industrial production from Germany. On Tuesday, we've got factory orders data, and we've got exports as well on Tuesday. So plenty for us to sink our teeth into when it comes to the German region. We've also got the likes of the PPI inflation number coming out for the Eurozone. We've also got retail sales coming out. And on Friday, we've got the Eurozone or the ECB's minutes from their latest monetary policy decision. And so there's likely to be plenty of volatility this week. And we can see that the DAX has been rolling over of late. Markets are expecting to see a rate cut in June. And Christine Lagarde did allude to the idea that they would be willing to cut rates ahead of a return to target. It's at 2.4% at the moment. Like I said, the past 3 months of inflation data do point towards a strong chance that we're going to see a resurgence in terms of inflation. Nonetheless, the tone from the ECB did point towards a possibility that we could cut soon enough, and that could really bolster claims that we're going to see a rebound for this market. So what we're looking out for, we're looking for weak data to force the hand of the ECB, and we're looking for those minutes to signal a willingness to cut interest rates in June. Should that happen, we're looking at a possibility that we've bottomed out and that we see the bullish trend returning back into play once again. But that's a big if. On the flip side of it, if we see those, an improvement in terms of the economic data, if we see the minutes from the ECB alluding to concerns over inflation and the possibility that they hold off for longer, then potentially we're going to look at this as a little double top formation, and a breakdown through 178.67 could see the bears coming back into play once again. I mean, we have seen this trendline break coming into play in the lead up to this, the rally into this deep Fibonacci zone. So we're sort of in no man's land at the moment, sort of consolidating. I think that this week ahead should give us a good idea on whether it's feasible that we do see an interest rate cut in June from the ECB. I think given what's happening in terms of inflation over the monthly timeframes, I think there's some significant question marks to be asked. But, if you're looking at commentary from members within the ECB, they do seem relatively confident that we will see a June rate cut. And so any further confidence, any further hints in that direction could see the DAX gaining ground over the week ahead.